Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour. As we start off the show today, of course, we had a big dip earlier in the morning. My belief in the newsletter was that we'd have a lot of folks short in the morning, only to cover in the afternoon. Kind of played around with both the Dow and the S&P. Not quite as much in the NASDAQ, getting back to unchanged, but I don't see a lot that's going to be out there. Of course, today is Wednesday. Still waiting. I didn't see anything in the news feed. Still waiting for the announcement from OPEC and OPEC Plus. So we'll keep an eye on that. But as usual, there's one thing you can count on. Almost like the mail, and that is that we'll meet here at the appointed time.
The following takes place between 2 p.m. and 3 p.m.
So that's kind of it. A few things that are very interesting for me, of course, are a pullback on the TLT. Let's pop that up. After having a fairly good low, looks like maybe we're going to get or try to get a retest in the bonds, but this is going to be on very light volume. I like to repeat over and over again, a low is not a low unless it's been tested on lighter volume. We're starting to at least get part of that today. Last low came in just a hair under 35 million shares. Today we're doing about 10.5. So, can we still see maybe a bounce into the 107 area? That'd probably be about the best case scenario. But if we continue to see light volume as we do now, at least that's a fairly good sign for those. Of course, we've had the dollar index all over the map. Let's go back to the DX here. Of course, let's go back here on a daily. Almost have railroad tracks on the dollar out here today. So that will be interesting. We got down to 110, really kind of found that as the low for the dollar. And like I said, 111, 18, 19, almost railroad tracks. For those that aren't living in loots, or for those living in loots, I should say. What you find here is sometimes called a tweezer bottom or tweezer top. That are some very big long candles that almost match each other. You'd like a little stronger close out here for the end of the day, so we'll see if we get a little bit more out there. But I'm going to call this about 85% of a tweezer low in the dollar. And maybe we just have to consolidate out here for a while, but certainly looking like kind of a blow-off top right up to 115 on the dollar index. A basket of 6 international Western countries, currencies, and we have that. Other things, as I said, we were waiting for OPEC to come out with their announcement. I didn't see anything. I tried checking about 15 minutes ago, didn't see anything. Maybe tonight, I'm not exactly sure. I think they're having their meeting now, which is, 8 hours ahead of us, probably something like that. So maybe it's today, maybe it's tomorrow. We'll find out how much they pull back. Pretty amazed to see in the great free state of Florida, gasoline below $3. A couple of things conspiring to get a $2.99 print on a gallon of gas. Part of it was the hurricane. We had a lot of fuel that was sitting off in the Gulf that continues to flow in, so they're cutting prices. We also have back when gasoline was $2.75 or $4.75 a gallon, they decided to have a 1 month off for the state tax, which started on October 1st. But man, what a wild differentiation between places of the country where it's $4.50, it's $3.50, it's, well, in California over the weekend it was $7 in LA. So wow, what a difference. But just kind of nice to go out for lunch and see under $3. Always makes you feel a little bit better. Does me. But I drive gas guzzlers. But that is the way it goes. So anyway, we can see what it can be on the high end and what it can be on the low end. Probably somewhere in the middle is what it's going to end up on. I am fairly bullish long term on energy, and even on a pretty poor day. Let me get it up here. We're seeing one of the few things that's up today is the XLE, as we fill the gap down in this sector from the 15th of September. That was down on 27 million shares. Today you're already up on 22, so you're probably going to get to 27. You've got yet another gap up at around 82 and a half, 82 and 3/4. Maybe all the way up to $83. And then the high back here not that long ago on August 29th. The question is just what is OPEC going to do? They're going to cut. The question is it about medium cut? I don't think we can look for a small cut. I think we're looking for either a medium cut or a very high cut. We've also got a war of words between the Energy Secretary of Germany, not too fond of Western energy producers like the United States, saying that we're price gouging. I think that anybody probably paying for winter heat in the United States will think, well, if it's price gouging over there, I'd hate to see what it would look like if it was actually here. With most people, on average, a family's going to spend between 1st of October and the 1st of March this year about $5,000 more than they did just 2 years ago. So a huge tax on energy, at least here in the United States. And if you're in Germany, it looks like a pittance. Anyway, 877-927-6648 is the number to call. You can email me at path@tfnn.com. But I continue to kind of see that. I think by the end of the day, we're probably going to see yet another push. The S&P looks like it wants to at least get back to unchanged on the day. I don't see much changing in that. Probably tomorrow morning, early, we'll see the end of fund buying. And the question is, are there enough shorts piled on to the market so that the market will probably just stumble up higher as they cover? We'll be back in a minute.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors. Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we're back. Give me a call, 877-927-6648. As I said in the opening segment, generally the big problem with being short is you make a lot of money and you just decide that it's all going into the handbag. Hell in a handbag instantly, and it doesn't. It takes very long times off. It may not go that much higher, but it tends to go higher. Everybody always thinks that we're going to go right back down to the lows instantly, and it rarely happens. If you go back and look in history, you get these light or medium moves back higher. You get maybe a 50% retracement. It may take a whale of a long time, sometimes 5 to 10 times longer than it took to come back. And then you get the next thing if you're still in a bear market. But don't be a perma bull or a perma bear. As the old saying is, bulls make money, bears make money, and pigs get slaughtered on either side. So, let's see, what else do we have here? Okay. I got that. Okay, we can go back to this. Okay. There we go. Just had to get some things cleared up on all my multitude of screens out here. I've got so many screens I could scream. Okay, so what else do we have here? Oh, we got to do a little history and then we'll move on.
Then it's all just a little bit of history repeating.
On this day in 2011, after a long battle with pancreatic cancers, the technology visionary, otherwise known as Steve Jobs, passes away. Jobs' contributions to the technology industry are undeniable, together with Steve Wozniak. But yeah, after a while, you can hire all the smart people. To be able to start off with someone smart like Wozniak, kind of different. Of course, Steve Jobs was 99.99% pure Barnum and Bailey. He liked technology, was a little irrational, miserable son of a bitch to work for. but occasionally that's what you need. You need to kind of almost be a psychopath to get to the highest levels of these companies. And, yeah, he was at least a little off. I never understood the whole turtleneck thing. Maybe he had something around his neck he didn't want to show. Not sure about that either. But wearing all black and all that always leaves me a little cold if you've got affectations. Generally, it's the guy that just goes up with the blue jeans and the denim shirt that can be the best guitar player. If you have 14 bolos and wild glasses, maybe you're more of a showman than actual good musician. There's room for both, but to me, I'd rather have the guy that didn't have to have the affectations. Of course, the biggest thing I can think of is just the difference in management styles between Steve Jobs and his Microsoft counterpart. Steve Jobs was a bomb thrower. He was a huge revolutionary, both in business and in politics. He didn't believe in incremental steps at all. And when you went to Microsoft, they were pretty much based on a book that came out of Japan that was, I'll give you the Reader's Digest version, make it 1% better every day. Make it 1% better every day. Just do that, and eventually you're going to get there. So two really different approaches. One didn't make it farther than 2011. The other one, now, probably just as nuts. As far as I can tell, I don't know what's happened to him, but certainly he's, I don't know, probably hanging around people giving him bad ideas, I have a feeling. On this day in 2011. Okay, what else do we have out here? First question is to look at Google, the Google, G-O-G-L, for us unwashed masses. You did have a bounce out here. Decent enough volume yesterday, a little bit of a pullback out here today. Like I said the other day, I think that probably the best thing in the world can happen to these folks is the Supreme Court forcing them to adopt free speech instead of deciding that there was a right to censor everything. And of course, we went through the court case a little bit in the show and in the den, but that Fifth Circuit opinion is absolutely devastating. Generally, you look for all the loose holes in the arguments. Maybe they can find one, but man, I think it's going to be incredibly tough. Probably the toughest part of that from the judge is they believe there's an unenumerated right to censor compared to a enumerated right of free speech. And now I won't look up enumerated for you. 877-927-6648. Anyway, just a bounce with the markets. Again, I have a feeling that it's probably going to be another 6-9 months before we see that. But I think after they have an excuse not to hack off at least half of the country one way or the other, and they can point fingers at the Supreme Court, most of these social media companies will probably be much, much better off. We looked at the TLT already. Let's go ahead and look at the SMHs. And, of course, you got really a bullish engulfing of yesterday's move on no volume. So, generally, this kind of action that we see today, as I said, everybody shorts in the morning, they cover in the afternoon, and this happens for a while until the shorts quit shorting, and then the market's ready to go back down. Now, if I was looking a place to go long, and I do think that we're going to have some upside, probably better upside in other sectors than the semis between now and the end of the year, I would look at the 193.66 50% retracement on this. You've got a couple of gaps right there. So you're probably looking at support at 193 to 194-ish in that area. Not betting that you're going to get that pullback that far, but that would be the best risk reward of anything. The Goldman Sachs. Okay. Just checking the emails here. We'll get to them when we return. Email me at path@tfnn.com. Call me at 877-927-6648. And in the den, if you've got a chart you want me to look at, fire away.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And as we return, question, take a look at Amazon. I got a couple more of the emails that we will get to. So what do we have? You have 2 things for Amazon. First is a double gap. And if you like single gaps for being tested, I'm going to say kind of 50-50 on a single gap, but probably 70-30 on a double gap, maybe 75-30. Or 25 on a double gap. Now, what would make me even think that area at the double gap of about 125 is the target for Amazon in the short term is a confluence area that runs from 125 to 127. It's a little wider, so there's not an exact number where you can just say, okay, I'll short or short at that level and if it closes above it, I'll close my trade. One of the nice things about confluence levels is you tend to be able to set, 10, 15 cent stops on the close if it closes above or below the thin line. And this, you'd want probably about a 50, 70 cent range. This one's about $2. So it acts more as kind of a speed bump than an actual wall. If it was 50 cents, you'd know it. Now, putting that together with the double gaps that still exist at 125 tells you, at least to me, that is the more probable topping out point in the short term for Amazon. As I said, kind of the end of fun buying today. Get sometimes a couple more hours tomorrow. Then you get into it. So are we ready to start consolidating out the bottom? Well, certainly on the volume, I would say that we are. We haven't had the super huge volume day of a sign of strength in the market, but neither have we gotten a sign of weakness. The volume did increase by about 10%. 20 years ago, that probably would have been okay. Now I look for 25, 30% even in the indexes, and a change of 50% in individual stocks. So is it on the light side? Yes. Is it on the bullish side of the flip of a quarter? Yes. It's not on the bearish side for volume on a lot of these stocks. Now today, you went lower, got lower volume in Amazon, about half the volume you had yesterday. So I think, could it go a couple of days out here and consolidate and then start moving back up? But yeah, I'm going to say 125 on Amazon is probably a high in the short term. Of course, hard to be bearish on Amazon going into a Christmas season. Them and Walmart, they probably have the best logistics, and this is probably going to be a logistics Christmas, where just getting stuff to the bare countertops, again, kind of like last year, is kind of the sign of strength in a business, although you may not have as many things as you had in previous years. Okay, got a couple more here. Emails. Look at that. Jeff wants to look at The Usual Suspects once again. One of the best movies of all time, by the way. Kind of the same kind of setup in Microsoft. That is, you have a good confluence level at about 255 to 256. 254 to 256. And that one is fairly tight. You've got a little bit of a gap that's holding us up now. My guess, though, is 255 is a bell ringer for the first move off the lows. And not quite a bullish engulfing into yesterday's, although yesterday was an up day. But not bad either for pulling back a little bit earlier in the day. As I said, I don't think why we may pull back just a little bit. I don't think we have any kind of huge move back down to the lows anytime soon. Probably think that at a minimum we get into the first week of December, and if not a pullback there of any kind of significance, probably into the end of the year. My guess is that everybody, although they know energy costs are higher, are really probably going to start cutting back a great deal once they start getting those huge bills from December and January. And that's probably where the maximum level of pessimism in the economy is going to be. Okay, we got Microsoft a little bit higher before this thing hits real resistance. We looked at Amazon. Amazon continues to, Apple continues to not even, it's not bad. You really didn't have much of anything yesterday. Maybe you tie that volume today. It's got a couple of big mushy areas above where you have a lot of gap downs on heavy volume, and you're going into that with light volume. Certainly Apple at the moment is the weak sister of the bunch. And FLX, if I could actually type it correctly. NFLX. Again, NFLX. Got a sticky keyboard. Okay. Yeah, I mean, you got some wild moves in Netflix. We brought it up yesterday, and I continue every day to read the Hollywood rags and some of these others that report on what's going on. Just billion-dollar mistakes everywhere, whether it's for Disney or Netflix. They are taking huge franchises and making horrible stuff that, especially in these series, where a lot of people aren't making it through the third, episode of the series. But the Lord of the Rings, some of the other stuff, She-Hulk, these things are getting some of the lowest ratings. And I think you could probably write up some of it to people actually going out and living their lives after a couple of years of being shut up. But also, I think a lot of this stuff got rushed to market, and it is horrifically bad. There's a lot of YouTube channels that just make fun of She-Hulk for the horrible CGI graphics, and the Lord of the Rings reboot has excellent graphics and literally no story. So, this is a creative process. Every time I ever saw everything go off the rails when I was working in Hollywood, it always was the executives, the non-creatives, getting involved and making a lot of trouble to justify their massive salaries and running stuff. My guess is that they've gone back to that model that didn't work very well before, and that is executives making the movies. They need to kind of hire great people and get out of the way. As a lot of people that look at Clint Eastwood's movies, at least the actors, they all say the same thing. He says, I hired these guys because I thought they were the best person to do the job, and I better not get in their way. And he's made some pretty good movies. Just the opposite happening in Hollywood. We'll be back in a minute.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
As we return, we're going to look at a couple of stocks. Got a question here that I had to think of during the break, and might not be the answer that Kelly is asking for. Anyway, I don't know if it's Kelly a guy or a girl. Anyway, he says, all your time out there in Hollywood, did you meet anybody as a big star that really impressed you? And I was in production. We were doing special effects for television in Hollywood. We'd bump into, or at least my job was helping the companies that bought our products do stuff. So I was always kind of peripheral around the edges, and sometimes I would attend meetings and they'd talk about some of the stuff that they wanted to do. And, you know, a lot of our stuff was used in TV shows and stuff like that. So there weren't that many big stars out there. A lot of the big claim to fame we had was that you could actually do it and still get it in the budget. So we weren't the most expensive option out there, although we did write some very interesting software to make some stuff doable that wasn't doable before, and at a significantly lower price point. So a lot of the things that went into it. So, yeah, I met Opie during Apollo 13 for, I don't know, a minute and a half. He asked me what we did, what the company did, and why I was there. And that was about, I think, a minute and a half after that. He was gone. But he appreciated it. So, I mean, that's normally what you would get. You wouldn't get, you'd bump into somebody, you'd recognize them. They'd have maybe a question for you. Before the big shots always came in, there would be handlers telling you not to look them directly in the eye, kind of stuff like that. Make sure these guys don't get distracted, all that kind of stuff, especially if you were on some kind of movie set or something. So there wasn't a lot of interaction. I have to say that, like I said, during the break, who I was most impressed by, well, long before this, probably 10 years, maybe 17 years before the height of our products in Hollywood, I sat next to probably maybe the most influential person in Hollywood ever, coming back from my brother's graduation. It had to be 1977 or 1978, something like that. And they didn't have any seats in the back, so I got pushed up to first class. And I sat next to Orson Welles. And we had some questions. He was very interested in what young kids thought and everything else. I think I'd seen Citizen Kane, but really didn't understand it being 18 years old. The Maltese Falcon and some of these other things, that kind of movie of that time, but really didn't impress me that much. Anyway, we got to talking and something, and before we left, I shook his hand. And he says, yeah, I know you're kind of young, and, when I was that age, I didn't think much about stuff either. He says, but one day, probably 25, 50 years from now, you're going to look back at this. You're going to be able to tell people that you shook hands with someone who shook hands of the two most important people in the 20th century. He said, you shook hands with a man that shook hands with Hitler and Winston Churchill. So, yeah. I don't think it's that same thing they used to say about having sex with everybody that they had sex with. But I did shake hands with someone who shook hands with both Hitler and Winston Churchill. I thought that was the most, that's probably the thing I'll remember the most. Of course, Orson Welles, kind of a genius, talking to a dopey 18-year-old who was headed back. He was most interested because I remember on the graduation, we were coming back. It was maybe I was 17 because it was the opening week. I think we were coming back on like a Wednesday or a Thursday, and all my parents and everybody was still out at my brother's graduation. And I was telling him how I was looking forward to this movie called Star Wars because I heard so much about it. And all he could say was, it doesn't sound like much of a movie. I do remember that. That was fun. Okay, other things going on except my random adventures and bumping into people, literally randomly, is SLB. I mean, you got the volume, you hold the highs. So the next question in Schlumberger is, where's the next high? Even though we've got incredibly tough restrictions here in the United States for offshore drilling, the price of crude, the embargo in Russia is now opening up the rest of the world. And finally, these companies are not going to be doing any business around here, I'm pretty sure, at least for the next 2 years. The administration's not going to let any offshore drilling occur. They're not going to let any onshore drilling occur. But the rest of the world, their prices are already double what we are paying. So it's hard for me to say that, in the short term, Schlumberger and some of these others do well, with especially Schlumberger's big in support and other operations around offshore. It's hard for me to not think that that's not going to be a continuing deal. They started really moving when England and the UK started talking about fracking coming back. So a lot of those offshore oil wells in the North Sea could have tremendous amounts of natural gas trapped in them. And I think what you're really seeing is that you've got a couple of nice gaps. I would think that you're going to top out in the short term with one more gap higher in SLB. DVN. A little less, probably because I think this company, if I remember right, is more U.S.-centric. Still a good move. The downside is that you're in this in a asymmetrical triangle. So far, what you can say is lower highs and higher lows. I like SLB of the two that you gave me much better longer term, but both are probably maybe a few days or a week away from topping out. Okay, Jay wants to know about Boyle. As we talked about the rest of them, what's going to happen is the first really bad cold snap is probably going to set the low. My guess is the low is going to be set just about as well as the low in gold was with the washout. We didn't come down and test the low. You had significantly lighter volume at $46 than you did at $38.70, the July 6th low and the low of October 3rd. Energy is lighter. Can you still get a pullback to the low 40s? You could, but I'm going to say this is kind of like playing Generac with hurricanes. You want to be long this thing when the weather turns. And what are we, 5th of October? What are we, 30 days away probably from the first big cold snap? I'd just be watching the news every night and waiting for the first -10 call out north of the Mason-Dixon line. That's probably where natural gas is going to start running. We'll be back in a minute.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
As we come back and get ready to wrap up the day, a little bit of a pullback today. Volume with about an hour and 6 minutes left to go is about 7.2 billion. So this will be most likely a lighter volume day than the previous two. My guess is probably 10.8 billion shares on the CBOE market share breakout. If you want to use the same volumes I use, email me at path@tfnn.com. I'll be glad to send you a link to that CBOE volume. I think it is much better than using the straight NYSE or the straight NASDAQ volume, as that's maybe 20% or 25% of all the volumes that are traded. Just because there's an exchange and they're listed there doesn't mean those shares have to trade there. And like I said, 3/4 of the trades do not happen at either one of the big indexes because they cost a lot more. So anyway, lighter volume, we got a dip. The question is, what do we have here for the end of the day? And, you know, off 0.1%, this is after you've had a kind of a big move off the bottom, especially in bearish markets, the real history is that short sellers, or those bearish, don't think that you could go more than a day or two without pulling back. That leads to everybody shorting in the morning and covering by the afternoon, which is what I put in my newsletter this morning. And I don't think much changes in that. I've got a couple of positions in the daily newsletter. I'm hoping for a pullback so that I can buy some stuff for longer term. But at the moment, I'm in the right sector. I'm not in the indexes. So I'm sitting fat, dumb, and happy being long and not being wrong. So when you can, not when you have to. We'll be here tomorrow, bright and shiny like a penny.
Building wealth trading in the stock market seems impossible.